Okay. So as I was saying, we started with the basis of technical analysis yesterday, where we talked about support resistance, then the market trend, which is the uptrend, the downtrend, the ranging market, and the shopping market. So today we are going to be looking at other stuffs, still based on what we have learned yesterday. So as we continue in the class, we are going to be building up on what we learned. So we start with the simplest stuffs before we go to the advanced stuffs. That is I teach. Okay. So today, does anybody have any question from yesterday? Let me give you some time. Any question from yesterday? Maybe I've gone through the video I sent to the group yesterday's recording session. Yesterday's replay, we have gone through it, and anyone, if you have any question from yesterday, please let me know. Let me know. Um, okay. All right. So for now, no. Okay. If there is any, let's just trash them now so that we will not be confused. The video for yesterday's class was posted in the group this morning. Sometimes we don't check the group. That's why we don't know some stuff. The video, okay, I yet to go through. Okay, the video was sent this morning to the group. So if you have not gone through it, please, you can always go through it so that you will catch up with what we are doing. So I am still Abamba Sarah. I'm a crypto trader, forex trader, and I'm also a content writer too. But I write basically on crypto and forex stocks. Okay, that's what I do. I've been trading since 2020, coronavirus era. I know that coronavirus pushed a lot of persons into the online space. It actually pushed me too into the online space. That's how I got there. And since I've been trading since 2020, I started learning and all of that. I've not worked. Yes, I've not done any of that thing except to trade those stuff. Um, please, I'm recording the meeting from my end. You don't have to record from your end. Thank you. Um, so like I was saying, I started trading since 2020 and I've been here. I've never regretted trading because that is what pays my bills. I never regretted trading and I'll still continue trading. There's nothing that will make me, I'm not saying anything now that will make me leave trading. So but that is about that. Actually, I think why I've been able to stay this long was because I invested in knowledge first before trying to earn. There are a lot of persons, they love the idea about forex trading, but they don't want to learn first. They just funded an account and the next thing they'll blow their accounts. They fund and blow. But they didn't first of all do the first thing, which is investing in knowledge. And of which I want you people to do first. You have to invest in knowledge, especially for those that are just starting up. Learn about the market, learn about the market. That's why having a community, being in a community of traders cannot be overemphasized. I know I'm starting at this way. Some persons have been in my DM and be like, they want signals, and they'll be like, they are JJC, but they just want to start making money immediately, and it doesn't really work that way. So, somebody it doesn't really work that way. So you have to take your time and learn. If you want to be a doctor, you have to go to medical school. If you want to be a lawyer, you have to go to law school. So if you want to be a trader, you have to go to trading school. Let me put it that way. Permit me to put it that way. You have to go to trading school. Okay. So please and please, let's do it to learn. Okay. So another thing you want to work on, I know I'm starting out this way, so I will prepare our minds for trading because some persons from a Monday, some persons will be trading with me in my group by Monday. Yes. So also you want to take away greed from your mind. Don't think that okay, I want to start trading now. By December, if you for newbies, by December I would have bought Benz. Abi, share na Benz again. Abi Benz not the again again. Abi Benz it again. Okay, you may not buy Benz by December, please, for those that are just coming in. But at least you'll be able to make something that will be okay and fair enough. So keep greed, keep greed. Forex is not a get rich quick scheme. It's a get rich slow scheme. So you get rich, but it's not automatic. It's not overnight that you get rich. Okay. So I think I'm trying to tweak our psychology so that we now have one kind of big plan that even go like goal, our dreams to be afraid of us. Say, guy, calm down. So let's get this into our head. So I think we should get started. I'm going to be sharing my charts now. And know that everything that I'm going to be teaching you will be what I use to trade. I'm not teaching you something different. I'm not teaching you something different. I'm teaching you what I know, what I've been trading with. So don't think I'm teaching you something alien. I think I posted something in the group this evening. Is it this evening or this afternoon? As regarding a withdrawal. So you have to stay with the market for long. You have to stay with the market. You have to learn in the market so that you'll be able to make those type of stuff. I know some person when they see withdrawal now, their head will be big, but they don't want to go through the process. Okay. They don't want to go through the process, which is really not good. You have to go through the process. So can you all see my screen? If you can see my screen, please let me know. Can you all see my screen?
Yes, ma'am.
Okay, what are you seeing? Let me know if you are seeing the same thing.
British pound, USD,
Okay,
US
okay,
dollars
okay, okay,
on
okay.
TradeView.
All right, thank you, sir. We are seeing the same thing. So today we are going to continue with candlesticks and chart patterns. On Monday, we'll see something else. Like I said before, we are building. Okay, we are building. We are going slowly. So now we're going to be looking at candlesticks and chart patterns. Now, we see for those that just came in, like this is your first encounter with Forex. You may not necessarily know what is this. You may not know what are these that you are seeing. You are seeing something that is blue, no, green. You are seeing something that is green, and you are seeing something that is black, red. Okay. The red and blue and green things that you are seeing is called candlesticks. So your candlestick, so your candlestick is something like this. Something like this. So I know how to draw. Don't mind me, I did not do finance. But I don't know how to draw. Well, think. Okay. So this, what you are seeing now is called the candlestick. So I think I tried. Thank you. Don't mention it. Okay. Let me delete the bottom part. Okay. Let me do it so. Okay. Perfect. So you can see this. This is the body of the candle. This place that I'm shading is called the body of the candle. This place is the body of the candle per se. Then this top part that is thin, like a stick, is called the wicks or the shadow. You either call it wick or shadow. So there is the upper wick and there is the lower wick. So for this candle, we have what is called the open, the close, the high, and the low. The open, the close. I don't know if you are seeing my cursor as it's going. The high, and the low. Now, there are two kinds of candlesticks. There's the bullish candlestick and the bearish candlestick. Like I was taking our fundamental classes earlier this week, I said the bulls are for buys, while the bears are for sell. So something that is bearish means that the thing is buying. It is decreasing, it's selling, sorry, it is decreasing in value. While something that is bullish means that it is increasing in value. So for the bearish candle, we have something like, let me use a red color so that we can distinguish it. Okay. So we have something like this for the bearish candle. So for the bearish candle, this is the open. The top is the open. The bottom is the close. Then we have the eye. We have, sorry, let me remove that part. We have the high, we have the low. However, for the bullish candle, the down part is the open, the up part is the close. Don't get confused. Why is it like this? Maybe this candlestick opened at $1 and closed by at $2. It opened at the bottom at $1. It closed at the top at $2. Whereas this other one, the bearish candlestick, opened at the top with $2 and closed at the bottom with $1. I hope that is clear enough. Okay, so this is just fundamentals with candlestick. I just want you to know that. Just want you to know that. So let me erase plate off so that we can let me delete the drawings first. I want to continue. So I hope our candlesticks are okay. So for instance, this one is a bullish candlestick. The market opened here. You can see that, and closed here. It went as high as this place, came down and closed here. Now it opened here. The next one opened here, went as high as this place, came back, came down again, went as low as this place, came here and closed, and then the next candle. Hope this is simple enough for everyone to understand. So that is for this for this. Now, this, you can actually see that the candlesticks are of different shapes and sizes. The candlesticks are of different shapes and sizes. Now, these stuffs represent different things. They have their own different interpretations that are telling you what is happening in the market differently. So if I see a candlestick that is like this, I know what to do. If I see the one that is like this, I know what to do. Now, it's not all the candlesticks that have meaning that you can use to make trading decisions. Just know that something like this, I cannot use it to make trading decisions. Something like this, I cannot use it to make trading decisions. Hope we are getting it. So, for us to know the candlestick that we can use to make trading decisions, we have to learn what is called candlestick patterns. We have to learn it. So the first candlestick pattern I will be teaching you now is the pin bar. The pin bar, that is the first candlestick pattern. I'm erasing this stuff so that I can make a good drawing for us to see. The pin bar is such that it has a very long wick, and a small body. It has a long wick and a small body. So that is to tell you that market was not that how do I put it, was not that active during the period of the weeks, like where the weeks are. So I just want to erase this trend. And okay, so the pin bar is something like this. You have a body, you have a body that is small. Then you have a wick that is longer than the body. You have the wick that is longer than the body. This is what a pin bar is. Now, all the patterns I'm going to be teaching you, they have two, which are the bullish and the bearish. There are always two: bullish, bearish, bullish and bearish, bullish and bearish. So this is a bearish pin bar, whereby the wick is on top while the body is under. So for the bullish pin bar, we have the body at the top like this, and we have the wick under. I believe this looks like an hammer. It's actually called hammer. Okay. So this is the bullish pin bar. This one is the bearish pin bar. Now, when you see a bullish pin bar, now the next thing you want to notice that number one, they work in line with support and resistance. That's why I started teaching you support. I started teaching you support and resistance yesterday, because everything I'm going to be teaching you now, it works with support and resistance. Remember, I was telling you yesterday that there should be a confirmation before you enter the market. Now, these are the confirmations I'm teaching you now. If you go, as we go further in the class, in the training, we still see more. So when a bearish pin bar occurs at a resistance, note, it occurs at a resistance. That means it's giving you the signal to place a sell order in the market. It's giving you the signal to place a sell order in the market. Now, when the bullish pin bar occurs at a support is telling you to place a buy order in the market. This is simply what it tells you. This is the information it is giving you. That's why it's candlestick patterns. So these are just the information you should pick from the market. Okay, I am going through my charts now. Nothing was prepared beforehand because I want us to do the practical together. I want us to do the practical together. So it's not something that I have just brush over. We'll be looking for these pin bars. These candlestick patterns I'm going to be teaching you. We'll be seeing it together. So I think I saw, okay, let me, okay. So we see, also, I'm trying to get some. Okay, okay. Let me expand the charts now. Now, in this place, we can see a bearish pin bar that was formed at the top of our charts here. This, a bearish pin bar here. Let me cycle it so that we know. So you can see a bearish pin bar here. That was, let me expand this title. Okay. It was formed here. And after it was given, market started dropping and dropping and dropping and dropping and dropping. So when you see a bearish pin bar at a resistance, after it is formed, after you enter trade at the close of candlesticks, but of candlestick. Don't enter when you trade when a candlestick is forming. So after a pin bar is formed, I see that it was formed at a resistance. You place a sell order, and your stop loss should be above, like a little bit above where the pin bar was formed. Don't put your stop loss here, just on it. No, put your stop loss above it. That is the best way to place stop loss. And your take profit should be the next support. So if I were in this trade, this is actually a swing zone. This is a swing, and this is a very good support too. So I can place my take profit at this support. Hope we are good. So that if you can see, the market actually did a little reversal at this support. Let me okay, you can see there was a support here. When the market got here, it respected it. So I should expect that as I'm placing my sell here, as it's going down, I said that I can take profits here because you see that this place, the market respected the swing that was here. Then this place at most, I should be out of the market because a trade from this place down to this zone is a very, very good trade. So this was another pin bar that was formed. I hope you can see this where my cursor is. Let me carry this one. I hope you can see where my cursor is. Let me just cycle it for this place too. There was a pin bar that was formed in this place too, and it's actually continued with the trends, with a downtrend like I was teaching people yesterday, and it continued with it, and it's just continued falling and falling and falling and what have you. So that is for the pin bar. Now we have the bullish pin bar. The bullish pin bar occurs at with support zones. It is valid when it occurs at support zone. Note this thing, there are conditions to trading it. I will not see a bearish pin bar in an uptrend and say, okay, it wants to sell. No, it works with support and resistance. So for the bullish pin bar, there's one here. And when it was given, the market went up. At least a trade that you entered from this place to this place is actually a good trade. It is a good trade. Now let's go back and see. I'm looking for examples that I can give you people. Okay. There's one bullish pin bar here. There's one bullish pin bar here. When it was given, the market started going up. And you can see that before it came down, so this supports and continued this way up. And continue this way up. I don't know if I'm looking for one last example before I continue. Now, if you notice, this is actually an uptrend like we learned yesterday. This bullish pin bar was formed in line with the uptrend. Now, it gives you an opportunity to join the trade. It gives you an opportunity to what? To join the trade. So, that is for the pin bars. So, like I want to reiterate, if you see a bullish pin bar at a support zone, you place a buy order. A bearish pin bar at a resistance, you place a sell order. I hope we should be taking notes too. Now, the next candlestick pattern we are going to be looking at is the engulfing bar pattern. I think I have, let me see, let's see if I can get something. Yeah. Also, can you see my screen? I don't know if I can expand this. Okay, I can't really. Let me see if I can expand. Okay. Okay. I think this is a trade that was taken today. You can see a pin bar that was here. This line indicates a support that I marked in my chart. You see a pin bar that was here. Another pin bar was here too. That is double pin bar. And I placed this buy order in this market. And you can see.
We cannot see your screen now.
Okay.
You can't see the screen.
You can't see my screen.
I can't see your screen, ma.
Pictures that you screenshots. Screenshotted picture.
Yes, easy. That's what I'm showing you. If you are seeing a screenshotted trade, that is exactly
Yes.
what I'm showing you. Are we good?
Okay.
It's not showing.
It's still not showing. Okay, I'm coming. Let me. What can you see now?
Well, okay, we can see it now. We can see it now.
What are you seeing? Exactly. What are you seeing?
Well, trade view screen.
Okay, trading view screen. Okay.
Yes.
We can see the screen now. Screen is showing you right now.
Okay. What can you see now?
Okay. The picture.
Okay.
So
So
USDTF.
USD CHF. Okay. Now I
Yes.
was trying to explain to you that I entered the trade with the pin bar that was formed, bullish pin bar at a support. And you saw how the trade went its way, like up. I entered a buy order. It went up and I took my stop loss below. The stop loss was here. I took it up, like up again. I wanted to show you another pin bar that was given. When, look at this place, a pin bar was given and I took my stop loss to this place where the pin bar is, and the trade continued rising before I exited. Hope we are good. Hope we are good. So let's
Yes,
continue.
ma'am. Yes, ma'am. Yes, we are.
Okay. So I was just trying to tell
Yeah,
you that this is
you are,
not
you are
just
seeing it now.
okay. This is not just theories. So let's continue. The next we are going to be seeing, the next candlestick we are going to be seeing is the engulfing pattern. The engulfing patterns. So the engulfing pattern is not just one candlestick. It is made up of two candlestick patterns. Two candlesticks that are formed in line with each other. Two candlesticks that are formed in line with each other. So one candlestick was formed first, then the next one was formed. So let's see. The engulfing pattern is such that we have two. Let me start that way. We have two, which is the bearish engulfing pattern and the bullish engulfing pattern. I've told you before that the market works in two ways, bullish and bearish. So it's either the market is bullish or bearish as a particular term. So the bullish engulfing pattern is such that the market has been in a downtrend. That means the market has been selling. The market has been selling, and suddenly, when this pattern was given, the market starts buying. So the first candlestick in a bullish engulfing pattern will be a small bearish candle, a small bearish candle. This will be the first candlestick in a bullish engulfing pattern. Now, the next candlestick that will be formed to it will be a bullish candlestick that is big. Note, it is big and it totally covers the small candlestick that is bearish that was formed. I don't know if you get this. Did we get this? So,
Yes, ma'am.
the first one will be a small bearish candlestick. For the bullish engulfing pattern, the first one a small bearish candlestick, while the next one will be a big bullish candlestick that totally covers. That's why it's called engulfing. Engulfing. It engulfs it, it covers it. Now, when this is given, maybe market has been falling, like market has been falling and falling and falling and falling. Now, immediately it is given, market will start going up, like it will start buying. So we have something like this, market will just start buying. And know that it works with support and resistance. Okay. So this is for the bullish engulfing pattern. Now let's quickly look at the bearish engulfing pattern. It's just the opposite. Just that the first candlestick that should be formed in a bearish engulfing pattern is the bullish candlestick first. The bullish candlestick first. And it's small. It's small. So we have a small bullish candlestick form first, then a big bearish candlestick that totally covers the bullish candlestick, and the market starts dropping. The market starts dropping. So let me just do a small drawing, a little drawing for us. So we have I want this one to be a red color. So we have a small, okay, this is supposed to be green. We have a small bearish, a small bullish candle. Yeah. And the next thing will be a bearish candle that is big and totally covers the bullish candle. So you have something like this. This is the bearish engulfing back. So the market was going up and up and up and up. And the next thing, the market starts dropping. You get. So let's just go to our chart now and see and look at examples. I think I saw, okay, this one is just right here. Thank God I caught on it. You see a bullish engulfing bar pattern. I think this one was from, okay, it was from yesterday. It was from yesterday. You see that the market was been what, dropping. And note that this is actually a support. Let me use our line. I'll be using an horizontal line this time. So let me just indicate to be sure. Yes, it's at a support. This was a resistance. Resistance broken becomes a support. So this was a support. Even here, we can also see one. Yeah, this is a bullish engulfing bar pattern. The market went up. It came here again, gave this bullish engulfing bar pattern, and it was going up before. I think market should be closing by now. Tomorrow there's no trade because tomorrow is weekend. No trade on weekends. So let me go and see. Wow, this is a very good bearish engulfing bar pattern. So this market was going up, and it gave a small bullish candle. Then it gave a big bearish candle, and you can see the drop and the drop and the drop. I hope this one is very simple to catch. Now, any candlestick pattern that is formed in the middle of the trend shows you that the trend will continue. Hope you are getting me. A bearish candle, bearish engulfing bar pattern that is formed in a downtrend will tell you that that downtrend is going to continue. A bullish candlestick pattern that is formed in an uptrend tells you that the uptrend is going to continue. So we have this one that is formed here in line with the trend. This one was just all over, it's just all over. Yeah. Even here, the market continued. See, I believe this is a support that the market started buying from. So we get that. Are we clear with this one? Let me know if you are good. If there's any
Yes,
question,
ma'am.
please.
Yeah.
Okay, please, you said something as regards to it will continue. Please, can you elaborate more? You said
Hello?
can you hear me?
Yes, I can hear you, sir.
Thank you. I said you said something as far if any candle does not fall in line, it will continue. Please, can you elaborate more on that?
No. Okay. I didn't say if it does not fall in line. I said that if it is formed in line with the trend. Okay, like, everything I'm teaching works with support and resistance. So if it is formed if a bearish engulfing bar pattern is formed at a resistance, you know that is the beginning of the trend, a downtrend. However, if the downtrend is going and you still see a bearish engulfing bar pattern in the same downtrend, that means the trend will continue. I don't know if I'm clear. Am I clear enough?
Okay, please, can you use maybe some of the
Okay.
candlestick pattern and elaborate, please?
Okay. like I was explaining, this is a bearish engulfing bar pattern. You see the small bullish candle and the bearish candle. Our market started dropping. Market dropped a lot. I believe from this place to this place, we are at 50 pips, which is $5 for 0.01 lot size, which is fair enough. But still, the market came again and gave another bearish engulfing. Know that the market is already in a downtrend. Now it came and gave this bearish engulfing. It also gave this bearish engulfing too and continued. I don't know if it's clear now. So if it is formed in line with the trend is going to continue. The downtrend is going to continue. However, if it is actually a bullish engulfing bar pattern that was formed here in a downtrend, know that is invalid. I don't know if I'm clear now. Hello, sir, are you there?
Hey, please, please, yes, I'm here. Please, can you elaborate what you just said now? Come again, please. Sorry.
Wow. So I have a lot of things to teach this evening. I said, if it is formed in line, like we know that a bearish engulfing bar pattern is for a downtrend. Now, if the downtrend is still going and another bearish engulfing bar is formed, that means the downtrend will still continue. I believe that is clear enough. Right?
Yes, yes, yes.
Okay. So
Yes.
It's clear.
okay. So the next pattern we are going to be looking at is a three candlestick formation pattern. Three candlestick formation pattern. Somebody just let me. Okay. So let's just continue. The three candlestick formation pattern will be three candlesticks that are formed together. Three candlesticks that are formed together. Now, the first, we started with one candlestick pattern, which is the pin bar. There are others, though. Let me know that. But for the purpose of this class, I cannot really finish everything today. So as we go on, we will still be learning. The learning does not end. Okay. So it's to the end of the month. Okay. So I want to, what we'll be looking at, which is a three candlestick pattern now, will be what I call the star patterns. Star. S-T-A-R. Star. Star pattern. So the star pattern is such that the we have still bullish bearish. Okay. So for a bullish star pattern, a bearish candlestick will first be formed. A bearish candlestick will be formed first. So bearish, I think I should use a so we have something like this. Bearish candlestick. Now, the next candlestick that will be formed can be neutral, like it can be either bullish or bearish, but it should be small. It can be a pin bar. It can be what is called a doji. A doji is a candlestick that is like a cross. I think if you are seeing my cursor, this is a doji. It's a doji. It's like a cross. So you have a doji or a pin bar, either ways, but it should be a small candle, it should not be big. Now the next one must note the conditions I'm giving you. The first one must be for a bullish bar pattern, a bullish star pattern, sorry. The first one must be bearish. The second can be bearish or bullish, but it should be small. Can be a doji or a pin bar. Then the last one this one is a must. The last one must be bullish for a bullish star pattern. So the last one must. It's a must. This is a bullish star pattern. However, for the bearish star pattern, that should occur at a resistance. The bullish occurs at a support. The bearish occurs at resistance. So for the bearish, the first one is a bullish candlestick. While the second one is neutral. The second one is neutral, either a bullish or a bearish, but it shouldn't be really big. It can be a doji or a pin bar. However, the last one must note my conditions. Don't just see anything and start trading. The last one must be bearish. This is what we call the star patterns. Series candlesticks that are formed simultaneously, one after the other. So if a bullish candlestick, a bearish star pattern is given, that means the market was bullish all this while. The market was actually bullish all this while. That's why it ends with a bullish candle. So the market was bullish all this while. Market was going up, and it gets to a resistance. It gives you this pattern, and the next thing you see that the market will just start dropping. The next thing you see that the market will just start dropping after this star pattern is given. Don't know if you are getting me. So the same goes for the bullish. The market was bearish like this, and maybe it gets to a support and gives you this. Immediately it gives you this, the market turns out to be a bullish market. Okay, and we have this. So let's just quickly run through our chart and see examples of this. Okay, this is actually one. I believe you can see this. This is one, a bearish candlestick, a pin bar, and then the next one was bullish. It actually went again, gave another confirmation with our bullish engulfing bar pattern and went up. I hope this is not difficult to grasp. If you are following, please let's. Okay, I've seen another
We
one.
are following. We are following, ma.
Okay, so I'm seeing another one right here. This was a bearish pin bar that bearish candlestick that was formed. It gave this small candle and a bullish pin bar too. The three candlesticks together formed a bullish bar, and you see the market was going up. Now it actually gave another confirmation with a pin bar, and market continued going up. So let us see other examples. I think okay, this is a bearish star pattern. You can see the bullish candle first. Then we see a pin bar that was formed. Then the next one was the bearish candlestick pattern, and market started dropping. It dropped and continued dropping. Then I just spotted a bullish star. First candle, second candle, third candle, and the market went up. I think this one is very sweet because it's all over the place. Is there any question there?
Yes, ma. I have a question.
Okay, sir.
My question is like on which time frame should we? Because you are using 4 hour time frame.
Okay,
So,
it
like-
works with any time frame. All the
Okay.
technical analysis I'm giving now works with any time frame. Just that it is actually more powerful with higher time frames. You understand?
Yes, ma. I understand.
Yes, it's actually more powerful with higher time frame, but it works with every time frame. Is there any other question? No other. Okay, I think we can continue. So the other stuff I'll be teaching you are relatively, they are just simple stuff. No ads stuff inside. So we'll be looking at chart patterns. What I just taught you was candlestick pattern. So the next we'll be seeing are the chart patterns, like charts. pattern. So for chart patterns, we have the tops and bottoms, that is the double tops and double bottoms, which is synonymous with the SNC concept of liquidity grab and pull, and I try to get the exact words. Okay, don't worry. As time goes on, I should get the exact words. So the double top pattern is whereby the market creates a two tops, just two tops at a resistance before finally dropping. Two tops at a resistance before it drops. So we have something like this. Market going up and up and up and up. I'm coming out to try and adjust something here. Okay. Okay. So the market is just going up and up and up and up and up. And when it gets to a resistance, it just did something like this, came down, went high again, came down, and started dropping. Now, these two places is what we call a double top. A double top. I know that it's looking like an M pattern, like EMU, your EMU. It's just a double tops. Now, when these double tops are given at a resistance, the market just starts dropping. The market just starts dropping. So what you do is to place your sell order. Place your sell order, putting your stop loss above the structure. Don't put it exactly on the structure, please. Put your stop loss above the structure, a little bit above the structure. Now your take profit should be at the next swings or the next support. I don't know if you get that. Now the double tops is double bottom is the opposite. That is the bearish. The double bottom is the bearish part of this. So we have something like this. The market has been selling, just going down, just going down. And when it gets to it just goes up a little. Does not break the previous high. So and you have something like this. So this is our first stop. This is our second top, and the market goes up. Now, here we have something called the neckline. Your trade is actually, the pattern is valid when the neckline is broken. So this is our neckline. For this one, this would be our neckline. Hope we are getting this. So let's look for our examples in the charts. This is actually one for a double bottom. So the market was selling, it went up, came down a little, then we saw market going up. So let me move back and see. Okay, wow, this is just all over the place. Thank God I just picked this chart, it just make it easier for me. So this is our first stop. This is our second stop. Note this. In the second leg, a bearish engulfing bar was given. And look at our neckline here. Our neckline is here, and market started dropping. Is it difficult? Let me get our responses. Is it difficult? Now, sometimes this stuff.
Please come again, ma'am.
I should
Come
come
again,
again. Which
Yeah.
part? Which part?
So a question I want to ask is
Very, very
that
sincere.
Bottom part.
Me myself, I'm lost. I'm lost here.
The
Okay.
double bottom part.
You double
so
bottom
the question I
part.
want to ask, is that what time frame are you using?
Now, presently, I'm using a 4-hour time frame, but this works with any time frame.
All right.
Okay. So, sir, you were asking about the double bottom, right? Okay, I think I'm going to use a brush here. So the market was coming down and down. When it got here, it went up, came down again, and went up. This is a double bottom. Is this one clear? Or should I give you another example? The person that asked this question, please, I need your response.
Another example, please.
Okay, let me go
Thank you.
look for another. Okay, I think I've seen one. So you can see this one. This one is actually, it didn't happen in one day. This one took days to happen. It came here, came down, and up. I hope with this example we are good.
Yes. Yes.
Are we
I've seen
good?
this one. Yeah, I'm good this one.
Okay, we can continue.
Yeah.
Yeah.
Okay. Now, if you notice something, to some extent, the candlestick pattern serves as a confirmation. I don't know if you are getting me for this part. Let me adjust my chart. So I think something just went up. Okay. Okay. For this double top that I just showed you, a bearish engulfing bar pattern was formed, and I don't know, it still serves as a confirmation, like a double confirmation. Trading, you don't trade in a hurry, wait for confirmations too. So for this one, a bullish engulfing bar pattern was formed. I don't know if you get at my key that I'm trying to present. So the next we'll be looking at, the next chart pattern we'll be looking at is our what we call the head and the shoulder pattern. Let me just tell you one thing about trading. I know you are going to be learning a lot for between now and the end of the month, but still, you must not trade everything. Like some person just trade timbers. Some person only trade engulfing bar. Some persons only trade with double tops or what have you. You must not trade everything that you are learning. Now, what you want to do is to pick one of the patterns I'm telling you, or one of the strategy I'm telling you, and try it consistently. That's what we call it back testing. Try it consistently and see if it works. You understand? When you are sure that it works, then you just adopt it as your strategy. The reason why I'm teaching you different strategies is that the market will not always present an engulfing bar pattern. You get? The market will not always present a star or a double top and bottom. You understand? So anyone that the market presents, you know that, okay, this is what it's going to do. But sometimes you can just stick to one and say, until the market gives me this, I'm not trading. It's discipline with trading. It comes with discipline, although it still comes with expertise. You understand? Okay, the next we are going to be looking at is our head shoulder pattern. Maybe newbies can be saying, what is head and shoulder thing? So you have something like this. Market going up, then it goes up, then goes like very up, like very high up. It gives something like this, and it starts coming. Now we will call this shoulder, maybe left shoulder. This is our shoulder, and we have this as the head. So we have a shoulder here, we have a shoulder here, then we have the head. This is what we is called the head and shoulders pattern. This is the head and shoulders pattern. So we have the neckline. So when the market breaks the neckline. When the market breaks the neckline, you can place a sell order and put your stop loss above the last shoulder or at the edge. You understand? Or at the edge for you to continue. Then we also have the inverse head and shoulder, which is the bullish head and shoulder. Okay, let me just extend my chart. I think I'm going to delete my pen. Okay, so let me do a for the inverse head and shoulder. So we have market selling and just comes down like this and starts selling up. So this is for my inverse head and shoulder. We have our neckline, we have a shoulder here, we have a shoulder here, and we have the head at the bottom. So this is what is known as the inverse head and shoulder. So for the inverse head and shoulder, you place a buy order. You place a buy order. And you place your stop loss at the last shoulder or at the edge, like below, a little bit below. So let's run through our chart. Our time is moving, fast. Let's run through our chart and see if we get some examples. If I don't see, after learning like this, you please use on your own. You have to go through your charts to confirm what you have been taught. Don't just sit down and I want to go to a lower time frame and see. I think I have one here. So let me expand my chart. Let me zoom out. So we see a shoulder was formed here. The market was actually coming down and it started ranging here. So it gave our first leg here, which is a shoulder. It came down, very down, and gave the head, came and gave another shoulder and started going up. Now, if you look at this properly, I'm giving you double confirmations as we are learning too. A star pattern was formed here. Another star pattern was formed at our next shoulder too, before the market started going up finally. These are extra tips that you should be looking at for as you are analyzing. So when you place a buy order at the formation of the last shoulder, you place your stop loss here, or you place your stop loss below your head, below the head. Up is perfect. So I want to look for that one I just showed you is for the inverse head and shoulder. Now I'm looking for a pattern look at a double top span here. This is a lower time frame. This is a 1 hour time frame I'm using now. Like I said, this works with any time frame. It works with any time frame, just that it is more powerful with higher time frames. So when you see it on higher time frames, please enter your chart from lower time frames. Okay. Especially people that are trading with less capital. If you are trading with a capital that is not up to $100, please be entering your trade from like 30 minutes, 15 minutes time frame. Don't use lower time frames gives you tighter stop loss. Lower time frames gives you tighter stop loss. That's why it's advisable to enter trades with lower time frame. But do your analysis from higher time frame. I hope this is clear. Trying to look for. I think I should go to another page.
So Eloma.
Yes, sir.
So when you say a lower time frame, from what is the range? 15 minutes,
15 minutes,
1 minute?
30 minutes. No. 15 minutes, 30 minutes. You can even use 45 minutes. Some use 5 minutes. For me, I don't do 5 minutes. Okay. I do
Okay.
15,
Okay.
30, 1 hour. I don't go below,
Okay.
I don't use 5 minutes. Because the noise it
Sorry,
goes.
I have a question, please.
Yes, sir. I'm listening.
All right. So, is it possible to you made mention of something that it's advisable to analyze at a higher time frame, then enter the
Yes,
trade at lower time frame. So, if you
yes, sir.
analyze using 4 hours, for example, so if you go back to like 30 minutes, is it that we are going to enter the trade at that 30 minutes? Will it be the same thing? Will it still be the same entry point and the likes, or it will change?
Okay. If I do analysis from a higher time frame, now I should enter with a lower time frame with that same analysis. Let me explain. If my analysis is telling me that the market is going to sell, okay, from the higher time frame. Now, if I'm going to a lower time frame, I'm still placing a sell on that. You understand? Just that the lower time frame will give me a good risk to reward ratio. My stop losses will be small, will not be as big as entering with a higher time frame. Am I clear?
Okay,
Yes,
so
ma'am.
the only difference is that the stop loss will be lesser with lower time frame.
Yes, exactly. That is the only thing.
Okay, but it's still the same market, right?
Yes, it's the same market. It's the same
So
market.
Okay.
does that
Is it that
imply
the
does that imply that at the higher times frame the spread will be higher? Is that, does it make any
No,
meaning?
no, not the spread that will be higher. The
Okay.
spread will not be higher. It's just the okay,
Oh, sorry.
but
So no, I don't mean to be higher. Would be wider,
no,
right?
it won't be wide.
Okay.
No, it
All
won't
right.
be wider. It's just you will have. I don't know how we explain this for us to understand. Okay. Um.
Man,
Okay.
can you
Let
give us a
me.
practical example for this higher time frame and lower time frame trading,
Wait.
like
I want
charting,
to give you.
doing
Yes.
analysis?
Yes. Now look at this very well. Look at my trend. A distance from here to here in a higher time frame. Maybe this is 15 minutes time frame now. You are seeing this distance. Now, if you go to 1 hour, this same distance will be something like this. I don't know if we get this first, but let's get this first. Like in 15 minutes, you are seeing it that is like this. However, in 1 hour, it is not as big as this. Hope this one is clear first.
I don't really understand.
Yes, it's good.
Okay,
Let's have a practical example.
okay. Let me see. Let me draw
So
a
what I think what she's trying to express is that when you go to a higher time frame, it compresses
yes,
hmm?
information.
It
It
compresses the
compresses
information.
information, yes.
So you will not be able to visibly see things the way they are moving at the higher
Wait,
time frame. All
wait,
right.
let me explain. Okay.
All right. Go on. Go on.
In 1 hour, if I place a stop loss here, uh,
Yeah.
if I place a stop loss at this place in 1 hour,
Okay.
and I enter a trade at this place, are you seeing it?
Yeah.
Okay. Now, this distance can be 50 pips. Or let me be more realistic, it can be 30 pips. This
Okay.
distance that you are seeing, But let me go to a lower time frame. It's looking small in your eyes, right? But at a lower time frame, let me see what I just showed now. I have to find. So let me go back and I'm just looking for what I drew just now, so that we will understand something. Your stop loss are smaller with lower time frames in here. I think that is the best way I can put it now. Your stop losses and your take profits are smaller with lower time frames. Do we get that? Why is the person answering the question?
No, no,
You
no.
still don't get it.
I don't get it. Yes. I mean, if you analyze a chart in 1 hour, 4 hours chart, you know the number of pips that you gain from the trade. Will it be as the same if you go to lower
Yes,
time frame
yes,
too?
yes. Okay, if that is the question you're asking, yes, it should be as the same.
Okay, that's what you do.
Yes.
So you say the stop loss will be and take profit will be
Tighter
smaller
in lower time frames.
oh,
It will be the same, but I don't know, the distance in the chart will be more.
Yeah. So how do we
It's
go about
less.
the distance? Because
No,
based on what you
it's not for you, it's just for, I just want you to understand that using smaller time frames to enter your market makes you to have less stop losses, smaller stop losses. Are we good?
Sorry, please. This BTC USD, is it still part
USD.
of forex, or is it crypto?
It's
Like,
crypto,
is it
but
crypto trading?
yes, it's crypto trading, but chat is chat. Anything I'm teaching you now, you can use it for crypto.
Oh, okay.
Yes, you can use it for crypto. So I hope all my questions has been answered. We are all good. We are good to go. Because our time is fast spent. It's past 9 already.
Yeah.
Are we good to go?
But
Yes,
I want
yes, ma, we are
I
good
want
to go.
I want to ask a question.
Okay, sir.
And the question I want to ask, I know this forex trading, there is one they trade by time and there is one they trade by beep. Like this one, I think this is by beep. And I think there's one I saw is by time. Like one is it Quotex? Okay, like they are rating Quotex uses.
I can't really get you. Your voice is breaking, sir.
No, what I want to ask, is it the same fundamental technical analysis you use in this one that you can still use in the other one to trade?
Yes, it's the same technical analysis, but not really the same fundamental analysis. Like if you are comparing Bitcoin and crypto and forex. For crypto, the fundamentals are different, but the technicals is the same thing. I hope we are good.
come again, please. Answer.
Okay, I said for technical analysis, you can use it to trade crypto.
Okay.
You
That
can use
it
it to
goes
trade.
forex too.
It goes for forex, it goes for crypto, it goes for stock. Anything that has to do with candlestick and charts, you can use the same candlestick and the same technical analysis interpretation to trade them.
Okay. But does not go for indices, right?
It goes for indices too, sir.
All right, ma'am.
Okay.
Thank you, ma'am.
All right. Any other question? Okay. I think if there is no other question, we can wrap it up from here. But I was saying something that for more. Are you there?
Yeah.
We are with you, ma.
Okay. So hope you are seeing my screen.
Yes, ma, we are seeing your screen.
So
Yeah,
what I'm teaching you is the same thing I'm using to trade. It's nothing different. So as you can see, this was a withdraw I did some time back. I want to then And this too, this one is recent. I think
Sorry, we
this
can't see
one.
it. We are just seeing the screenshot. We can't see it. It's not showing.
Okay, are you seeing anything now?
Yes, we are seeing it.
What are you seeing?
We are not seeing.
Uh,
We are not seeing the lineups of this thing. We are not seeing the content of what you are trying to click on.
It's still
It's as if it's still loading.
Okay, still loading.
Screenshot. There's a screenshot now.
What we are
That shows
seeing,
that shows graph and one small.
Okay.
you're not seeing your screen now.
Okay. So by Monday, this class will continue, but it won't continue with everybody. Okay, that is what I want to say. It will only, I'm going to be shifting at some persons that will actually be more serious with. So I will actually name out the conditions in the book, but I just want to end the class here
Network is
so that
bad. I don't know if it's network. I will you know.
my network is bad.
No,
Okay.
May not be.
That,
no, I can't. I can't see anything.
It may not be your own network. It could be
okay.
different other network. Yeah, it may not be your own network, man.
Okay. I'm going to be ending the class today. I'm going to be ending here now so that we can go over the class and learn and go over the class and gain more knowledge.
I don't
So
know. I can't hear anything though.
who else is not hearing me?
I don't know if it's my network. I don't know. It's
Please
general.
come again from, you said from Monday, something, something, something. Please start all over
Okay.
from there.
I said for Monday, I will continue the class with a few persons. I think just with 10 persons or thereabout. But then I'm going to be placing the conditions in the book. It's still free, but there are some conditions attached to it so that I will shift that to those that may not necessarily take the class seriously. Hope we are getting that.
yes, ma'am.
Yeah, so what
Okay.
are the conditions?
Okay, the condition is simple. You open an account with Stickney Broker and you fund it. That's all.
You
Fund
do
it.
what?
It's just
You
like
fund.
fund the account so that we'll be giving us signals for Monday. Trading signals. The signals is
But you
free.
said it. But hello, you said you don't give signals, man.
I say I only give signals to people that are working with me, not that I just don't give signals.
Okay.
So we'll be giving our signals for Monday, and the training will only continue with people that will create an account with our broker link and deposit in your own account. So your deposit is still at your disposal.
What's the
You
minimum
understand?
deposit?
The minimum deposit is 30,000 naira. It's still at your disposal. But you just show us that you have made a
I
deposit
say come
and
on.
you are ready to trade. I said
So you say
30,000 naira.
So, hello, man.
I can hear you, sir.
So, what my suggestion is this: we are only learning this thing. We don't know how to trade. So, I
Okay.
would have suggested that let this training get to the month end you want to say. Let at least 1 month. Let us train for 1 month. Then we fund the accounts so that we can also use the account to practice what we have been learning. I'm
Okay.
not. I welcome the funding of the account. I love it.
Okay, sir. We
Yeah,
are still the one
because if
giving
you
you the signals to trade.
because if you screen people out of the funding now, is more or less of the nine so many because people will be afraid. People will be afraid to committing fund when they don't even understand the fundamentals of this or the rudiments of the trading. Like
Okay,
me, I'm ready to fund the account, but I think I should take the training to at least minimum of 3 weeks or 4 weeks so that then I will now know how to mitigate my loss and how to plan the trading, and then from there we pick it up. So
okay,
at least that trading, that funding, the 30,000 is not much. This is what anybody can afford. Yeah. So I
okay,
love that.
okay, sir.
Mm.
I told
Then
you that
secondly,
I will
man.
be the one giving you signals. And
Yeah,
you are
man. The
learning,
signal with you, man. Hello, man.
sir?
Okay,
Huh?
you'll be the one giving
With you,
signal.
man.
Yes, sir.
You'll be the
Man.
one giving signal.
Yes, sir.
Hello, man.
And if
Can you
you are
hear me?
giving signal, are you telling us how to click, and what to do? Do you understand? Anyway, you are going to teach
Yes,
us before then,
sir.
sir.
But
Okay,
that one,
good.
man, that signal of a thing will not. I don't think will be of benefit to us because some people will be lazy to go on with this thing with the training. Like
So you still have to go on
once
with
they
the
are gaining
learning.
something, once they are gaining money, they will provide you sending them signals instead of them doing the real thing.
I want a situation
Yeah,
where everybody
yeah.
can
So
earn
that
as
was
they
what-
learn.
that is a good one. That was why I suggested that we should conclude the training. Towards the ending of the training,
Yes,
we
that
now
is
get
fine.
our account funded.
Okay.
I
Hello,
think that will be fine. Let's
Hello,
not
Account is
be in
not like
hurry. Let's not
ma.
be in hurry with this
You
training, with
understand?
this
Then
funding.
get our account funded.
30,000 naira is small amount, but let's have the
Yeah, sure,
knowledge.
sure.
It's a
It's
token.
doable. 30,000 is a
It's a
doable
token.
fund. Honestly, if you ask me, it's
It's,
doable.
It's a
So
token.
it's
It's nothing
towards
doable,
the
but
about.
last end
support.
of the program, we would have known what to click. So if you give
Yes.
us a
We
signal,
have to
if you give us
familiar
a signal, say
with the
come to this
interface.
place.
we become lazy. We let
While
people become
everybody's
lazy.
talking and nobody's talking.
Let's try and be familiar with the interface of the trading field or the platform we want to use. Some of
Miss
us
Sarah,
we are
I think I
some of
support
us
other
we are
people
novice
as
about this
saying
thing. We don't even know
the
how to
knowledge of
where
this
to.
thing is very, very important. Having the
Okay.
Ehen.
knowledge is important. The funding
Okay.
is not an issue. I getting me
Yes.
sincerely,
Okay.
but I
And we
think
are
we are
surely
The
here
going
to
to
thing
get
is
get to
this
that
job.
gain
you
the
can
knowledge.
still actually fund and decide not to take the signals till you are ready.
Hello, ma. I
So
don't have an issue
it should be
the
trading demo
funding and
account.
the trading.
But
But
I
I would
want,
just suggest, hello, man, even if you want us to
yes,
fund the account, it's not an issue. But the signal of a thing, I'm not buying it, man. It will make a lot of us to be lazy.
I
Won't
think
face the
even
training.
sometimes, even
Telling
without the signal, some people still get lazy with learning.
hello,
No,
I have a
actually, the
question.
signal
My
will
own
not
is a
make people
question, and
lazy.
it's
It's
an
just a
important
way of
question,
making
so,
money.
please.
Actually.
once you are making your
Please,
money and someone is giving you signal, you won't bother yourself again, bro.
Please,
I'm
my
telling
own
you,
is a
the fact.
question, and it's an
the
important
person that
question, please.
has a question, please come up.
Okay, my own is a question. Like,
Okay,
I
sir.
want to know, because I like the idea of funding and among the basics and trading. But I have my only issue is I want to know the how the possibility of making withdrawals. Like, does it give you a lot of things that you need to do? Because I had an account with a broker and I have some money stocked in that account. The reason is because if I wanted to withdraw, they say I have to pay. I have my withdrawal commission is $6. Then I have to the rules is so much. I need an international banking
Okay.
and banking
Are you
number
seeing
and all of those.
are you seeing what is on your screen now? This screenshot that is here.
Yes, I'm
They are
seeing
not
it.
saying it.
You have to be seeing it. Somebody is seeing
I'm
it
seeing
now.
your screen. I'm seeing your screenshot. Though it's not bold, but I'm
You
seeing
can't
the
see the
screenshot.
content that is there.
Okay,
They're
I
You
only
think
see,
I'll
seeing
send
the
it to the
pictures.
group. I'll send it to the group.
Zoom it and probably
It's
send it
already
to the group.
Zoom.
That is better.
I'll send it to the group. I think for this book I'm using, you don't pay an
Yes, ma'am.
additional fee for open depositing and withdrawing. There is no additional fee added. Exactly the amount you deposit or withdraw, that's the exactly amount you receive. There's no
Okay.
additional fee for that. And just yes, between few hours, your money will be in your account, your Naira account. If you are withdrawing to your Naira account.
No problem.
All right, I think that will be all for today. We are going to be ending the class
So
now.
are we still funding, man? Are you still
We've not
that we should
concluded
fund?
though.
Hello, man.
We'll fund though.
Actually,
We'll have
sorry?
Are we still funding, man? Are we